On Thursday, Mullen Automotive made a 1-for-9 reverse stock split in order to comply with Nasdaq listing requirements. Now, Mullen, to say the least, has been dismal in terms of the stock performance. If we look at the stock performance, you can see that over the past 5 days, stock is down 3.3%. Past month, 36%. Past 3 months, 91%. Past 6 months, 98%. Year to date, 98%. And 1 year performance, essentially down 100%. One of the reasons why the stock has been trading so dismal is that they're not really selling any cars. Yes, they sold 22 of their EV vans to a group called Randy Marion Automotive, but that only brought in $300,000 of cash. And for any car company out there, they can tell you you need millions and millions and millions of dollars to operate. So let's get into the article that talks about the stock split before we continue with the analysis. So the stock was trading higher, but gave up all those gains. Now this is the second reverse split that Mullen has enacted this year. The first came on May 4th after the company initiated a 1-for-25 reverse split in order to meet the Nasdaq minimum price requirement of $1. The reverse split that occurred today will initiate to meet the same requirement. Nasdaq has provided Mullen with a deadline of September 5th to achieve the $1 threshold. Including today, there are only 18 business days between now and the deadline. With a 1-for-25 reverse split and another 1-for-9 reverse split, that brings Mullen's cumulative reverse split ratio to 1-for-225. A 1-for-10 reverse split or greater instead of a 1-for-9 would have brought the ratio to 1-for-250, making Mullen ineligible for compliance period and risk of being delisted. Now, what I like to look at is how confident are the insiders. 77% of the stock is owned by insiders, but only one bought shares in the last 12 months, and that was only a measly 27,000. However, in the last 12 months, there were 4 transactions that amounted to $5 million. And the big one came in the first quarter of this year. Now, what's going to make this interesting as we approach September 5th is currently the number of shares that are short is roughly 20%. So we might see a short squeeze occurring in the days leading to September 5th. However, that remains to be seen. Now, going back to the charts. Let's go to the daily chart. Now, when I look at the daily chart, potentially you have a double bottom occurring. But in order for me to take Mullen serious, I need to see price take out that pivot high at 160. Otherwise, I'm going to anticipate that price is going to make another lower low. But again, it all depends on the Reddit group, Wall Street Bets, and are they going to pump the stock higher? Now, if they do, which we've seen in recent weeks with Yellow and Tupperware, C3.ai, it's very possible that they're going to get wind of Mullen Automotive and pump this stock higher. In which I would say if they can get price screaming higher, and they could see the stock pump a couple of 100%. So let's go to the weekly chart for that. It would be an amazing short at $3. That would represent a 200% increase in the price. Now, history of Mullen, they started out in 2014. They merged with another company, and unlike other EV makers who have had more success, Mullen overall remains dismal. And they're making pennies. And so this is not a stock that you want to own, regardless of the reverse splits, regardless of whether price pumps on a short squeeze. There's just other opportunities out there if you wanted to invest in EV makers. Thanks for watching. Subscribe. Please like the video.